Welcome back, guys. Just a quick video today to discuss the goings-on this weekend with the Chinese ride-hailing company Didi. For those of you who don't know, Didi is a Chinese version of Uber, and they raised $4.4 billion in their listing on the New York Stock Exchange this Wednesday. This was the biggest Chinese listing in the US since Alibaba listed about 7 years ago. So Didi went public at $14 on Wednesday. The stock rallied sharply, and then 2 days later on Friday, news broke that the Chinese regulators are investigating the company. They say they're doing this in order to maintain national security and protect the public interest. The stock fell around 5.3%, I think, on Friday to $15.52 on this announcement. The IPO investors who got in at $14 will still have been up at that point. Now, the Cyberspace Administration of China, which is called the CAC, then went on to announce today, Sunday evening, that Didi's app had problems of seriously violating laws on collecting and using personal information, and they ordered that Didi be taken down from Chinese app stores. The decision to publicize this review and the timing are fairly surprising, to say the least. These actions are all based on China's new cybersecurity review system, which is about a year old. So the US markets are closed this Monday to observe the 4th of July. Happy birthday, America. But it will be interesting to see how Didi trades when markets open on Tuesday. I'd probably bet on a bit of a down open. I made a video about a year ago when the US Senate approved new legislation that could lead to Chinese companies possibly being delisted from US stock exchanges. This was being passed in order to protect US investors. The new law requires foreign companies listed on US exchanges to be audited by the Public Company Accounting Oversight Board and to declare that they're not owned or controlled by any foreign government. Now, this law applies to companies from all countries. It's not just Chinese companies. It's any foreign company listed in the United States. But the law was passed after a number of scandals raised questions about the state of Chinese accounting practices and whether US stock exchanges are doing enough to protect investors from fraud and scandal. Since that law was passed, it might surprise you that Chinese companies have actually been in a huge rush to list on US exchanges as quickly as possible. The goal being to get in before the US government implements these new requirements. The way that it works is that foreign firms that are already listed get 3 years to comply with the new legislation, so they want to get in advance of that. Now, as an investor, it's really worthwhile understanding how securities regulation works before investing in stocks like this, Chinese companies listed in the United States, and really all international investments. There's different rules and it's worthwhile understanding them. Didi's a big company. It has more than 377 million users, which makes it about 4 times the size of Uber in terms of customers. It employs 13 million drivers, which means that it employs more people than the entire population of Belgium. The company collects a huge amount of data from the addresses that its users frequent to their phone contacts and even audio recordings of car rides, which it started taking after passenger murders in 2018. I guess drivers murdering their passengers is sort of worse PR than the fact that you record every conversation in the car. Anyhow, Didi hasn't filed any new reports with the SEC relating to this issue at the time of this recording, but they have issued a press statement thanking the competent authorities for guiding them to investigate their risks and saying that they will resolutely implement authorities' demands and will remove the app from app stores for rectification. It's worth noting that investors were warned about this type of risk in the IPO prospectus, and if you do invest in IPOs, it's usually well worthwhile reading the prospectus. This action will obviously leave a very bad taste in the mouths of US investors. From a cynical point of view, it could be argued that the Chinese government was willing to allow Didi to take billions of dollars from US investors and then leave them holding a rather unattractive bag by announcing this investigation and removal from the App Store days later. Didi have said that users who have already downloaded the app can continue to use it for now. This is, of course, part of a larger story of the Chinese government cracking down on its tech sector. Other fallouts from this government campaign include the silencing of Jack Ma and the cancellation of the Ant IPO. China isn't the only country grappling with its tech sector. India's had a lot to say about the behavior of tech firms within its border. And of course, the US Congress has been making efforts to cap big tech's scale and power. Of the three, the United States appears the least likely to do real damage to technology companies right now. Anyhow, see you guys later. Have a great weekend. I have a much longer video coming out in a few days' time, so subscribe and hit the bell icon if you want to be notified of that release. Have a great weekend and see you later. Bye.